All right, folks, we're going to cover macro analysis for the dollar and compare it to both the yields and bonds market. Essentially, what we'll be going through is the dealing range, premium and discount markets, premium and discount quadrants. We'll equally do an equilibrium analysis, determine the current market structure, identify critical levels to develop an if-then narrative, then finally conclude it with the correlation among the three markets we've just discussed. Okay, so this is the dollar chart weekly time frame. You can clearly see that price has really been bearish for most part of the year. Since around January, we've seen price delivering lower, and a key low being keyed, a key low was keyed in on Monday, 15th September. And currently, I love the reaction that the dollar's had to EQ. The best play actually for this quarter in terms of quarterly shift would have been to buy it all the way to equilibrium, but we are more or less almost at equilibrium, but not yet there. We have a weekly buy side liquidity that has been tagged here. However, I am not quick to assume that this draw in liquidity would bring about a reversal in the overall trend. So what I am waiting for is to see how the premium quadrants would support the same narrative. So essentially, this is, let me just zoom it out. This is the larger range in terms of where price is dealing right now. And we have the shorter term range right over here from this low, which was created on Friday, 17th of October, all the way to Wednesday, 5th November. I'm currently monitoring this low. I'd really love to see price respect the premium, the discount quadrant of the premium market if we still have bullish momentum. Otherwise, if we lose this critical level, which is the equilibrium of the premium market, I'd equally love to see price fall all the way to the larger range equilibrium right here, which overlays with the weekly fair value gap. In terms of market structure, we're still bullish even on the daily time frame, meaning the market structure hasn't changed and we haven't broken any significant lows. If you're keen, you'd see the market has been forming higher lows and higher highs. I'd treat any retracement back into this range. I'd treat any move back into this range as a retracement for longer term continuation of the buys that we expect to key in. However, if we lose significantly this level, the daily SSL, which also is a weekly SSL point, I'd shift my bias. Currently, though, I'd be really cautious about buys until I see a clear confirmation of rejection from the discount quadrant. Yeah. Moving forward to market correlation. We're going to compare the 5-year treasury note to the 10-year treasury note and the 30-year. So basically why we do this is to identify a crack in correlation, which signifies a potential change in price delivery. If there is a crack in correlation in the bond pricing, depending on whatever side that happens, it informs where the dollar might potentially go to. As we all know, the bond prices is in inverse correlation with the dollar pricing. So for example, the bonds prices were plummeting lower since this double top formation, you'd equally identify that's exactly when dollar made its low and started rallying higher. If we spot a crack in correlation with the lows, it means that the bond prices might be shifting gears for another bullish run, but that is not the case, since on the 5-year treasury bonds we can clearly see we have relatively equal lows For the 10-year bond prices, it's equally, well, relatively equal lows. I wouldn't really call this a crack in correlation. And for you to identify as something as a crack in correlation, it needs to be visibly undeniable. The 30 year is equally delivering same to the 10-year. So with this being said, I do believe that dollar is still poised for sorry, for a continuation rather in its trend, supported by macro factors as well, since the US economy is currently recovering from tariffs and Trump just got a suitable deal with the Chinese government as well. Um, that would be it for now. I'll give you more updates as price unfolds, and equally, I'll update any entry models or execution patterns I see on our Discord channel. Apart from the dollar, I equally wanted us to have a look at NASDAQ. As you all know, the stock market has been rallying heavy for the past few months. NASDAQ has been posting all-time highs actually. You see, this is the highest high ever made with the NASDAQ pair, and it's equally advisable not to trade against the trend. So as much as the trend is bullish, I'd still want to call for higher prices, but I do believe that this daily SSL is a good tag in liquidity before it chooses if it's going to continue the trend. So I'm currently monitoring prices on the lower time frame, of course, for entries down to this daily SSL before doing a fresh analysis of the same. So going into next week, I'd be very interested in seeing if I'll get opportunities to ride the bear market, but a short-term move to tag this liquidity right here. All updates will be provided in our Discord channel. Kindly follow us and stay up to date.